Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So yesterday and the day before we talked about breaking on the short-term context on the market, not actually on the forex market, but across the board on all markets, commodities as well, and just because the fundamental background has changed. So there's a lot of negative fundamental factors have appeared recently. The major one is the new lockdown in the European Union, problems with the virus spreading. So additionally, some other factors have been announced. So that has changed the short-term context and fundamental background because investors are disappointed with the previously suggested harmonic recovery of the global economy. And now we see that different countries shows absolutely different pace of the recovery, which could hurt overall mutual relations between the countries, economical relations, and put the shadow on the perspective of the global economy recovery, reducing the overall pace of the recovery. That has triggered the demand for the safe haven assets, in the United States dollar in particular, the demand for the United States treasuries bonds, so you can see the interest rate dropped a bit on the 10-year bond. So you can see that this downward action is continuing. And on this background, we have the breaking of the short-term bullish context on the daily chart as well. And that's the reasons why we said that currently the next level that we're considering actually is 116 on the daily chart. So on the daily chart also currently we suggest considering any chance to go short instead of the buying euro, because major support 1835 has been broken. Reaction on the OP target has happened, but if you have read our recent weekly report, even in this report we said that overall background stands bearish. We have pointed few moments, even on the technical price action, that is not good for bullish performance. For example, here you could see acceleration on the CD leg. That is not good for ABCD pattern, and it in most cases leads drop to the XOP. That's why on the daily chart our strategy currently suggests taking shorts until market hits 116. Around 116 we could think of taking short-term bullish position because we're considering possible head and shoulders pattern here, as you can see. And once market starts to form right arm, there could be very healthy bounce for it, maybe 2.5 points up from this XOP area. And then we will try to hold with this head and shoulders. But this is a bit long-term story. Currently we're just focusing on this current downward action. It means no long positions by far on the daily chart. On the 4-hour time frame chart, we're still considering the same butterfly that we discussed already. The market ignores XOP recently, as we discussed already, target inside of this butterfly, and it's dropped below the lows, it stands flat below them. That is negative sign, as we said. So usually when the market aimed on the upward action, it could show the wash and rinse and shows the fast recovery once the stops have been grabbed below the lows. But if the market dropped and stand below it, it means that we can't talk about any bullish background. So in nearest term, we have the target of the butterfly at 1740. We've already discussed it, and then we keep watching for a pullback. So mostly we're focusing on the two levels, 1850, 1845 probably it will be once market will reach these lows, and approximately 119, 118.90 conference resistance. It also agrees with this natural support resistance line. So it was support here, breakdown, and now it will be possible resistance. That two levels we consider next week for a chance to go short around them. Additionally, if you trade on the very short-term charts, you could consider this most recent thrusting action because it takes very good shape. Actually, this is the same thrust that we're considering on the hourly chart, where we were looking for a double ripple pattern here, but it has not been formed. Now the scale of this thrust increased and stands very strong on the follow time frame chart. That's also reason to consider possible patterns around it. So for scalp traders, it might be the same double ripple. Once market hits the butterfly target and return it back up, that could be kind of double ripple action that could trigger the upward retracement right back right to these levels. So that's additional setup that scalp traders could consider. For those who trade on the daily, we ignore any intraday bullish context. For us, major interest stands around the resistances, where we could consider taking the short position. So that's actually our view on euro currency for nearest perspective.